There has been a lot of buzz and investment in the quick delivery app space in India in recent years. Swiggy Instamart, Blinkit and Dunzo have all raised billions of dollars in venture capital and have promised to deliver groceries and other goods to customers in minutes. Quick commerce startups, as they are known, offer customers groceries and daily necessities that can be ordered through an app and delivered in 10 minutes. That certainly sounds like sorcery. The fast commerce market will grow from $300 million in early 2022 to $5.5 billion by 2025, according to Redseer. Rising demand for convenience and the rise of online shopping are driving this expansion. Quick commerce was one of the most hyped sectors in the startup world in 2021. Venture capitalists invested $1.9 billion in fast commerce startups. These startups capitalized on the rising demand for fast and convenient grocery delivery, especially during the COVID-19 pandemic. The reality, on the other hand, is less rosy. Several of these on-demand delivery apps are having difficulty remaining profitable and sustainable. Some businesses have already closed or reduced their operations. Grofers was one of India's first fast delivery apps. It was founded in 2013 and has raised more than $1 billion in venture capital. Blinkit, another quick delivery app, purchased them in 2022. In other news, Reliance Retail and Google-backed Dunzo, a hyper-local quick commerce company, has deferred 50% of salaries for managers and above. There are several reasons for the quick delivery app's struggles in India. Here are a few examples. Low average order value, AOV, because quick delivery apps primarily sell low-cost everyday items such as groceries. Their average order value is lower when compared to other e-commerce platforms. High operating costs. The necessity of maintaining delivery fleets and nearby warehouses raises operating costs, especially when AOV is limited. Intense rivalry among major players has triggered a price war with heavy discounts, further squeezing profit margins. Dependence on venture capital. Quick delivery apps rely heavily on venture capital for expansion, but the evolving funding landscape in India poses risks to their long-term viability. In addition to these difficulties, quick delivery apps have been chastised for their environmental impact and the working conditions of delivery drivers. Given the difficulties they face, it is not surprising that some fast delivery apps have failed or reduced their operations. However, the industry is still in its infancy, and some companies may be able to overcome these obstacles and succeed. Not only are startups competing in this sector, but bigwigs like the Ambanis and Tatas have already burned their hands in the race. JioMart Express, Reliance Jio's 90-minute grocery delivery service that debuted in March 2022, has announced that it will be discontinued. Dunzo, in which Reliance has invested, is also struggling. Even Tata's Big Basket is also not profitable yet. It lost Rs 813 crore on revenue of Rs 7,119 crore in fiscal year 2022. Losses increased by more than 4 times over the previous year. Is it safe to assume that the quick delivery market is simply unprofitable? Or is there any hope? What do you think? Tell us in the comments and get the ball rolling.